Welcome to my channel, where I talk about AI tech and stock market daily. Today I want to talk about something different. So I wanted to start today by diving into a highly significant and rapidly escalating issue, the ongoing Middle East conflict, which involves countries like Israel, Palestine, Lebanon, Gaza, Syria, and their surrounding neighbors. This conflict has implications far beyond the region and could have profound consequences for regular investors in the Western world. In this video, we'll discuss the latest updates from the Middle East, how this conflict is playing out on the ground, and why it is crucial for investors to pay attention to the ripple effects that may impact global markets. As of January 2025, the Israel-Palestine conflict continues to escalate, with multiple regional players involved, including Lebanon's Hezbollah and Syria. The death toll in Gaza has reached catastrophic proportions, with reports indicating that over 22,000 Palestinians have died since the war began in October 2023. Israel's retaliatory operations, including airstrikes and ground invasions, have devastated Gaza, displacing over 85% of its population. Israel has also reported at least 450 of its soldiers dead and over 1,500 wounded as of the latest updates. The conflict, which initially centered on Hamas-controlled Gaza, has quickly morphed into a broader regional confrontation involving Hezbollah in Lebanon, as well as potential involvement from other countries like Iran and Syria. This conflict is not just a localized problem for the region. It is starting to impact the global stage. While Israel has made substantial military strides in Gaza, including the bombing of military targets and Hamas leadership, the violence is now spilling over into Lebanon, where Hezbollah has become increasingly active. You might be wondering, how does all of this impact me as an investor, especially if I'm based in the Western world? Let's break down the key ways in which this conflict could influence global markets. One of the most immediate and significant impacts that geopolitical tensions in the Middle East have on Western investors is the volatility in oil markets. The Middle East is home to some of the world's most important oil-producing nations. While Israel itself is not a major oil producer, the conflict has destabilized surrounding regions, particularly with tensions between Israel and Lebanon, as well as the proximity of Syria and Iraq, both key players in the oil market. The broader region, including the Persian Gulf and countries like Saudi Arabia and Iraq, produces more than 30% of the world's oil supply. Therefore, any disruption in the flow of oil from this region can have far-reaching effects on global oil prices. During times of instability, investors often rush to oil futures, pushing prices higher. Even small disruptions, like damage to pipelines or the fear of further escalations affecting supply routes, can cause significant price spikes. For example, oil prices surged in the immediate aftermath of the October 2023 outbreak of the Israel-Hamas conflict, reaching highs of $90 per barrel. As tensions grew, oil futures saw dramatic fluctuations, with some analysts predicting a potential spike to $100 per barrel in the coming months if the violence spills further into Lebanon and Syria. This increase in oil prices would directly impact Western economies, particularly in Europe and the United States. This creates a ripple effect for investors globally. Higher energy costs can lead to inflationary pressures, which might affect interest rates in the United States and Europe. Rising inflation, already a concern for Western economies, can hurt consumer spending, which in turn can affect stocks of major retailers, tech firms, and other consumer-driven industries. According to recent reports from the International Energy Agency, a sustained increase in oil prices by even $10 per barrel could reduce global economic growth by as much as 0.3%. This may result in higher costs for both consumers and businesses, pushing central banks to hike interest rates to curb inflation, potentially slowing down the broader economy. The heightened geopolitical risk also creates uncertainty for global stock markets. As tensions rise in the Middle East, investors often retreat to safe haven assets like gold, United States Treasury bonds, or the Swiss franc. This causes shifts in market behavior, with fluctuations that could negatively affect portfolios that are heavily invested in equities. Companies operating in the region, such as those in the energy, defense, or infrastructure sectors, can see their stock prices move erratically in response to news from the front lines. For example, defense contractors like Lockheed Martin, Raytheon, and Northrop Grumman, which often benefit from increased defense spending, could see a spike in their share prices as governments raise defense budgets. On the flip side, stocks in sectors like tourism, airlines, and international trade tend to be hit hard during such conflicts, especially if air travel or shipping lanes in the region become disrupted. The ongoing unrest also poses risks to emerging market economies that rely heavily on trade routes passing through the Middle East, or those with significant exposure to regional conflicts. Nations like Turkey, Egypt, and Jordan, which have been involved in diplomatic efforts to de-escalate the conflict, are also economic players that could face instability if the violence continues. Turkey, for example, has a critical role as a transit point for goods traveling between Europe and Asia. If the conflict worsens, global trade routes could be disrupted, leading to higher costs for companies and affecting their profitability. This could lead to capital flight from these markets as investors seek safer options. One of the most alarming consequences of the ongoing violence is the humanitarian crisis unfolding in Gaza, which is becoming increasingly dire. The destruction of hospitals, displacement of civilians, and lack of access to basic necessities has led to international condemnation and calls for action. The conflict could lead to calls for more international aid, which could strain the resources of international organizations and countries providing assistance. In the United States and Europe, governments may feel compelled to redirect funds to aid relief efforts, potentially affecting their budgets for other initiatives. The Middle East conflict is not just a humanitarian or political crisis. It is a reminder of the interconnected nature of the global economy. For investors in the Western world, the implications are vast, ranging from energy market volatility and inflationary pressures to disruptions in global trade and increased geopolitical risks in emerging markets. As tensions escalate, diversification becomes key. Keeping an eye on geopolitical developments, maintaining a balanced portfolio, and understanding the interplay between global events and market trends will be crucial for navigating this uncertain period. If you found this analysis insightful, please subscribe to my channel for more in-depth coverage of technology trends and market insights. Thank you for watching. See you next time.